Last year, President Trump signed a massive bill that targeted cuts on individual, corporate, and estate tax rates. And the lower corporate tax rates are said to be precursors to job creation, which remains to be seen. The final bill of over 500 pages involved many changes of the tax code, and how the tax bill affects you depends on your personal situation. For example, how many children do you have? How much do you pay in mortgage interest and local and state taxes? How much do you earn at work, among other things? You're probably asking yourselves questions such as, how do these changes affect me? What are the main things I need to know about the tax bill? How can I still achieve financial freedom? Well, on today's show, I have several experts to help tackle these questions and more. So make sure you don't go anywhere. You don't want to miss it.
Be informed. You gotta know what's going on in our community. So together we can make a change. You and me. Be in contact.
Our first guest is CPA and managing partner of McGee CPA Group, founded in 2004. He's a graduate of Morehouse and a member of the Georgia Society of Certified Public Accountants and the American Institute of Certified Public Accountants. Please welcome Ryan McGee. Hi, Ryan. Thank you so much for joining me today on In Contact. I know this is tax season and it is very busy, so we appreciate having you here. Now, I know that some clients may be concerned about the new GOP Tax Bill. What do you think about it?
I think it was a great thing. I think it was something that was needed. There hasn't been a change to the tax code since '86.
Really?
Yes.
Okay. All right. So tell me a little bit more. I mean, you know, the perception is that this tax cut is not a great thing for America, but can you kind of expound on why it may or may not be?
It depends from what perspective you see it. To some, it benefits them. For some, it doesn't. For the most part, the fact that it was passed by the GOP, which are typically conservative, rich, people that are wealthy, the code was going to benefit the wealthy. And it may or may not benefit people that's on the other end of the spectrum.
So can you talk to me a little bit about how the tax cut impacts corporations? And what does that actually mean? So
the highest tax rate for a corporation is 35%. It went from 35% to 21%. As a whole, the average global tax rate for corporations is 25%. So they were able to get it under the average corporate tax rate.
So what does that mean for the global impact for corporations? How does that help America overall? So
instead of jobs and people domiciling corporations in different countries that have more favorable tax rates, the fact that the United States has a 21% tax rate, now corporations will either want to come to the United States or bring the repatriated income back to the United States.
So would that impact perhaps like maybe job creation?
Perhaps that's something that's being debated, whether or not they would take the savings as a result of the tax code being changed and using that to give bonuses or hire more people or
bringing jobs back to America.
Correct.
And really incentivizing those corporations that are across the water to come back to America.
Correct.
Okay.
Correct.
All right. So now I have another question. The tax break or the tax cuts have really kind of impacted those that make $470,000 or more. Can you speak a little bit to that and the why? Is that because it's the wealthy?
Yes. When they changed the tax code, the tax rates, they also changed, which means that the 7 tax brackets changed as well. The highest tax rate was 39.6%. It went down to 37. That 2.6% difference may not seem a lot, but for people that are making millions of dollars, that could be tens of thousands of dollars in tax savings. It's anticipated that for the higher wage earners, their average tax break will be $50,000. When on the lower end, it'll only be $900.
Right. Right. So tell me about how this would impact the average citizen, or folks that are making under $470,000. That's a lot of money.
So how they would mainly be impacted is the personal exemptions goes away. So if you, for every person you claim on your taxes, you get to claim a personal exemption. So if you have a husband, wife, 2 kids, that's 4 exemptions. The fact that that goes away, you no longer have those personal exemptions available to take. However, on the flip side, the standard deduction for most people or most individuals doubled. So how they circumvented the loss of the personal exemption was by doubling the standard deduction.
So how do you explain that to your average tax client? Do they have those type of questions when they're doing exemptions? And can you talk a little bit about that?
Yes. If I understand you correctly, in most cases, for the average person, you will either have the standard deduction or you itemize. Now they're trying to simplify people's ability to file their taxes by doubling the standard deduction and getting rid of the personal exemption, and now you only have the standard deduction. Most people will only have the standard deduction available that they would utilize as far as their tax preparation or their taxes.
So will this tax cut help the average citizen in the short term and in the long run, perhaps? Do you have any perspective or thoughts around that?
Well, you have to, great question. Keep in mind, after 2025, the tax bill, it ends. So all of this goes away at the end of 2025.
Okay.
So for the short term, you could say no. I mean, for the long term, you could say no. For the short term, you could say yes.
And this will impact corporations as well. These same tax cuts.
Great question. The reform for corporations were permanent.
Okay.
For individuals, it was temporary. After 2025, it gets restructured, if you will. Is
there a reason why there's that difference, or is it just we don't know right now?
To be honest, that's debatable. Of course, you want to make the United States more favorable to the different corporations around the world. So it was probably more of an opportunity to be more appealing, if you will, to the global market.
Okay. On average, you talked about the exemptions is another thing that is going away, but there's something to kind of circumvent that. When people are filing their taxes, are there some things documentation that they probably should be bringing in addition to the standard W-2s and things of that nature?
Well, you want to bring the normal documents that you get from your employers, which includes your W-2s, your mortgage statements, which are your 1098s. If you have investments, you get dividends or you get interest, so you have a 1099 DIV, you have a 1099 INT for interest. If you received a refund from the prior year, then you would get what's known as a 1099-G, which informs, so you have to recognize that on your tax return as well. The best thing to do is, if not request an organizer from your tax preparer, which is basically a form that you fill out that jogs your memory to help you think of things that you may have either forgotten or just didn't come to mind. Okay. Which is very helpful.
Now, are there any things the average citizen can do to cut their taxes?
Yes. So you can look at, there are different investments. You have, the IRAs, so you could do a traditional IRA, you could do a Roth. Now with one of the benefits of the new tax reform, you could also pay for private school via a 529.
Ooh, can you talk about that? So
initially 529s were only relegated towards paying for college or college expenses. So now, which was with a great benefit. So now you have the same benefit that you could use to pay for your kids' private school. Correct.
Does that apply for charter schools or anything like that?
It's across the board. But let me qualify that by saying you could only apply $10,000, or you could only withdraw $10,000 from the 529 to pay for private school.
I see.
But the benefit also, you can Superfund that account. So say if you had $50,000, $100,000 that you wanted to put in that 529, you could go ahead and what they call Superfund that the 529 up front, so that not only will it cover private school in the tenure in the time your kids are in private school, but you can also use the same fund for college as well.
Okay.
And you've had that money in that investment that's
growing.
That's growing over, correct. That's growing or have grown.
So are there any final thoughts that you have in reference to the GOP tax bill and any type of, quick wins or any tips or hacks that you can think of as we wrap up this segment?
I would say educate yourself. I would say today you have Google, which is the number one
search
education,
engine, right?
Correct, and number one source in the world as far as information. So if you want to just Google GOP tax bill, how will this affect me? How will it affect the rich? How will it affect the poor? How will it affect middle class Americans? So it's more about education.
Well, this has been just an extremely insightful conversation. Is there a way for our audience to perhaps contact you or follow you on any social media platform that you'd like to share?
Okay, right now we're in the process of revamping our social media. I can be reached on LinkedIn at Ryan McGee, RyanMcgee, by phone 404-377-4911, and email rmcgee@mcgeecpagroup.com.
Ryan, thank you so much for being here. Don't go away. We'll be right back. Stay in contact.
Child sex trafficking is a new American slavery. Did you know that there are nearly 250,000 children of color missing and no one is looking for them? In Atlanta, sex traffickers make over $32,000 a week selling a child's innocence. This is my 15-year-old daughter and my 17 and 13-year-old sons. I don't want my family or yours to be next. Learn how to keep your child safe from traffickers at ourchildrenskeeper.org.